Morning. You're welcome to another edition of Import Export Platform Facebook Live from 3Team First Trade Academy. My name is Dele Ayemibo, and I'll be continuing our discussion on starting and managing export business. I'll continue my thoughts on risk mitigation in open account trading, and I'm going to go a little bit off time. Deeper into that today. I will be spending more time on open account in this series. I actually do not even know when I'll finish open account, maybe in another 5 episodes, basically because of the fact that a lot of businesses are using open account and not knowing the implication of some of the issues around open account trading. Open account trading has come to stay. I've emphasized this severally, and the fact that, what's interesting about open account is that Nigeria on the import side is not allowing open account, but Nigeria is allowing bill for collection, which is a glorified open account. On the export side, there is no restriction, but on the import side, Nigeria is not allowing open account. And I understand why, because I was told that many years ago, some Nigerians were not paying their bills under open account transaction. That means they request for open account, but they don't pay the buyer they are dealing with. The seller they've gotten the goods from, and that made government to deem it necessary to restrict open account. But the world has moved on from then, such that now you really cannot do trade transaction in the world without doing open account. So open account are really come to stay. What we can do is to align ourselves with it. We can't say we are not going to deal. If we say we are not going to deal, other people are dealing and they are going to gather business from us. Remember about international trade is a global market space. Everybody is competing for space to find a place where they will be able to express themselves and be able to make some deal. So if any organization or any company that have chosen not to want to be part of the move can likewise get aside, because it has come to stay. Everybody has to deal in it. The only thing is that anybody dealing in it, we have to find a means of reducing their risk. So at the end of the day, they can still do their trade transaction and still be safe. They can do that and still be safe. So, but trying to say that you will not deal is saying that I don't want to trade with the world. I want to be on my own. Whatever the world is doing is none of my business. I'm going to be on my own. And I'm asking myself, for how long will you be able to do that? For how long really will you be able to do that? Because you really must trade with other parts of the world for your business to grow. You cannot stay on your own. You cannot stay on your own. And this is very important. Very important in the sense that if you decide that you want to stay on your own, it's going to be very difficult. And Nigeria has taken that stand. We have taken that stand in the sense that we have decided that we are not going to trade in open account for import. But what I know for a fact is that a lot of people doing business in Nigeria are trading on open account. A lot of people. But they won't declare it as open account. Maybe it's going to declare it as open account that the organization or the bank or the government will be able to know about it. Despite the recent credit crisis, globalization continues to its march. Now it has become common for corporate supply chain to span multiple geographies and jurisdictions. There has been a fundamental shift in how global trade is conducted. Recently, public research has found that traditional bank-assisted trade finance instruments such as letter of credit has found less than 10% of global trade. Less than 10% of global trade. Global trade. And it's been declining since then. This, as of 2010, letter of credit constitutes just 10% of global trade. Letter of credit constitutes just 10% of local trade. Open account constitutes about 80% of local trade. Other various forms of payment constitute the remaining 10%. Based on the recent analysis of messaging volume and value of SWIFT, concluded that the indicative market share of world merchandise trade for letter of credit has fallen to some 9.3. This was as at 2010. It probably has fallen to about 5% now. while the indicative market share of collection is about 1.4. Letter of credit 9.3, bill for collection 1.4. Letter of credit 9.3, bill for collection 1.4. This data revealed a clear and continuing corporate trend to conduct cross-border trade through direct open account, thus increasing the opportunities for adoption of innovative supply chain solutions. Traditional documentary trade finance instruments continue to have a role within global trade, but experts recognize that open account will provide the core framework for cross-border trade during the next 10 years. And this is already showing, it's already becoming more and more obvious that this postulation, this prediction is holding true as true. Financial supply chain automation is the key enabler for many of the current trade finance initiatives, delivering significant cost reduction and risk mitigation. An increasing number of banks are offering solutions that streamline their corporate customer purchase order, invoice, and dispute resolution processes. These solutions help automate the financial supply chain. Now, cross-border open account transactions are susceptible to supply fair performance and fraud risk for the buyer and credit risk for the supplier. This is a major challenge. As a matter of fact, in November 2009, Agility, a Kuwait-based company that is the principal food supplier to U.S. military in Iraq, was indicted on charges that it defrauded the U.S. government in an $8.5 billion fraud and conspiracy case. The complaint accused this company of filing false invoicing, failing to pass along discount, and asking vendors to decrease the amount of product in their packages. Although an extreme case, the need for control within the financial supply chain to mitigate this risk is clearly highlighted. What will have changed had this company employed financial supply chain automation? Each purchase order presented will have been agreed by all trading counterparties, including the buyer's bank and seller's bank. Consequently, invoice and good delivery data would have been compared with open account match, and any exception found placed into financial approval workflow. Had the approval process occurred electronically and on a per transaction basis, the buyer would have benefited from from this fraud. Now, in order to mitigate the risk of open account and the impact that that will have on trade transaction, a new trade instrument was put in place by International Chamber of Commerce, and this is called the bank payment obligation. Bank payment obligation. Remember what open account trading is. Open account trading increases the risk of not getting paid because you ship the goods to buyer, send documents to the buyer clear the goods and pay you afterwards. Existing trade instruments like LC have well-established and accredited guidelines with dispute resolution procedure built around it in form of UCP, as per by the International Chamber of Commerce. If banks are to offer automated cross-border open account services, they must ensure new rules, standards that are widely accepted in the market. Because when there is a default, if such rules and standards are not in place, it becomes very difficult to seek a redress, which was the whole idea around this new trade instrument. Together, the banking community and SWIFT have developed a new trade instrument called the bank payment obligation to address the risk of open account, the counterparty risk of open account. A component of the SWIFT Trade Service Utility platform, the BPO builds on the legal structure available through existing trade instruments and combine those structures with benefit of open account transaction. As a matter of fact, BPO brought together the best of two worlds. The simplicity of open account and the security of letter of credit. the simplicity of open account, and the security of that credit. In addition to this, it is also automated. BPO provides valuable assurance to both buyers and sellers. Similar to an LC, the buyer's bank issue a conditional irrevocable guarantee to the supplier's bank. It is subject to the obligation of predetermined condition and matching of data at various points in the trade cycle. Both buyer and supplier are guaranteed that payment will only occur upon an open account match. The BPO will likely be endorsed by the International Chamber. The BPO was endorsed by the International Chamber of Commerce in 2010, further enhancing its credential for cross-border mitigation, risk mitigation, and financing. BPO creates a compelling case for corporates to process their cross-border open account trade through the banks. The framework provides improved visibility and control, effectively creating a risk-mitigated transactional trade platform. This secure cross-border environment unlocks exciting possibilities for automated trade and supply chain finance. So what has happened at the end of the day is that through the instrumentality of bank payment obligation put together by banks, SWIFT, and International Chamber of Commerce, an exporter can now export on open account trading and still have a bank guaranteeing that that payment will be made. An exporter can export on open account trading and still have a bank guarantee that that payment will be made. And this is very important. This is extremely important, that open account transaction, that the payment will be made on such transaction. So at the end of the day, organizations around the world can then continue their usual business on open account. They can continue their usual business on open account. Why? Because now there is a guaranteed source of payment, otherwise called the bank payment obligation. So in our world today, we have this trade transaction called the bank payment obligation that secure payment in a trade transaction. So at the end of the day, what it has basically done for you as a person that is going into international trade, especially on the export side, is to let you know that you are really not as unduly exposed as you thought. You are now protected. You have a means of protecting yourself from the risk that you face in a typical open account transaction. This risk can be easily mitigated now. By engaging bank payment obligation. By the way, bank payment obligation is driven by technology. And that's so important. Because what that has made possible is that it is devoid of the subjectivity. Created by document examination by individuals that has its worldview, ideology, and skill, competence, and lenses with which it sees the rule that guides of credit, such that at the end of the day, you can have a situation in which a bank can say a document is discrepant, another bank can say the same document is not discrepant, having opposing view. So with BPO, we've had a situation in which the subjectivity of individuals has been completely eliminated. the subjectivity of individuals has been completely eliminated because the matching of document information for compliance or discrepancy is done through data match. And this data match is not done by individuals, it's done by a system, it's done by an application otherwise called the transaction matching application. And this way, the risk around open account has been successfully mitigated. Now, there are different options for mitigating it on open account. What I've said today is just one way of mitigating that risk on open account. What I've just spoken about now is just one way of mitigating that risk of open account. The latest SWIFT data show negligible growth in trade message category and combined with large increase in import-export support the notion of a shift from traditional letter of credit to open account trading. This transition is most evident in the US and Europe. Who are those driving trade in the world? US, Europe. Combined together, probably about 50% of trade in the world. The managing director of of business unit of Citigroup, John Allen, notes that intense competitive pressure are forcing participants throughout the world, throughout supply chain, to improve their efficiency and drive down costs. The largest importer no longer want to rely on time-consuming and labor-intensive commercial letter of credit. Instead, they are seeking transaction interface to take advantage of data contained within their ERP system, enterprise management system. So they say that in Europe, open account trading has taken over efforts in the creation of Eurozone, with companies using credit insurance and factoring to mitigate this risk. I will also be talking about export credit insurance along the line. Now, these importers are reaching out to Asia and the need to implement the same more cost-effective cross-border sourcing system as their other people in the US. The above situation is having a significant negative impact on exporters. Suppliers could previously rely on LC to mitigate risk to obtain financing. Furthermore, in the Asia market, banks will provide up to 85% working capital advance against LC to finance the production of the goods. Now, this source of funding is not as widely available again. So as the world is embracing open account, the implication of businesses is that many businesses are now unable to get the usual financing that they used to get. Why are they unable to get it? They are unable to get it because many people in our world, because of the increase in open account trading, which expose banks to risk and make banks not to be interested in funding that kind of transaction. As increased number of companies are participating in cross-border trade across the world, there is increase in the need to mitigate the risk of open account. And there is also increase in the need of efficient document processing and financing. With the world total annual import-export volume in merchandise goods, in merchandise and commercial services increasing by more than 40% in the past 5 years, from about $14.4 trillion to about $20 trillion. This is making the use of open account becoming a very high-risk transaction. In addition, trade marketplace has undergone a dynamic shift in transaction format from both ends of the supply chain, affecting importers and vendors alike. Specifically, there is a noticeable transition from letter of credit to open account trading, allowing savings and enhanced efficiency throughout purchasing cycle. Within domestic market, open account trading has always existed. Until recently, however, major barriers such as lack of transparency and apprehension about cross-border exposure have limited international open account trade. Advances in technology and increased financial knowledge are diminishing this concern. The question then is, how do we mitigate open accounts trading? Like I said, one of the ways the world is mitigating open account trading is basically by embracing technology in the form of bank payment obligation. Unfortunately, for one strange reason, many businesses in the world have not embraced this new technology-driven payment method, otherwise called the bank payment obligation. And that's why I'll be spending the remaining part of this talk on mitigating open account risk to talk excessively on open account and how to mitigate the risk. I'm talking about the other means and ways of mitigating the risk. Technology has greatly improved the speed, accuracy, and security of global trade open account transactions. Citigroup proprietary enhanced open account trading platform facilitate processing and relieve the administrative burden of clients making transition from letter of credit to open account. As they make this switch, many importers' clients are re-insourcing the processing that was formerly outsourced to banks. By using this system, the importer can outsource the account payable function back to the bank. A bank like Citibank open account trade platform accepts various types of electronic messages from importer to deliver it deliver it to the appropriate vendor or warehouses for subsequent document matching. It then relieves documents in either electronic or paper-based format, depending on what the exporter can provide, complete the required comparison of trade documentation in a low-cost environment, and send a response back to importers using electronic message. So what some banks are basically doing is, they are not shying away, but rather developing a platform to enable their customer trade on open account. SMEs will join larger importers in transition from signing letter of credit to open account trade very soon. This market segment is composed of a variety of import companies accounting for large amount of trading activity. SME will follow the example of large importers to achieve the bottom line benefit that accrue from open account trade to service this market. According to Conorsalic, historical products which have been developed for large corporate sector migrate to SME marketing platform. We have seen this with a variety of our business, including our account receivables, it said, finance program and document preparation program. And they anticipate the movement to open account that will follow, that will be affected by a lot of SME in very, 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 very near future. What he's saying is that as it is today, the large volume of trade done on open account is largely done by the large corporates because of the huge thoughts they have for themselves. However, SMEs are forced to begin to go in this direction. As a matter of fact, in my opinion, they really do not have a choice than to align, because they are going to have to work with these large companies sometimes as their business progress. And if these large companies who are going to give them big business insist on open account, the SME will have to follow suit. So what Citibank is saying is that a lot of SME will have to go in this direction. And I love the idea of Citibank. They are already positioning themselves to take on the SMEs, having taken on the corporate already by developing a platform for open account